please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So it's actually the OMCs that are getting bid up once again. There's a nice move on IOC, HPCL, BPCL. All of these stocks are climbing to the highs of the day. There we go. Almost all of them moving in unison. And on the other side is something like a Dr. Reddy's, Cipla. Some of these pharma names are getting sold down as we get towards the close. So big move on the OMCs. And Reddy's is completely polar opposite. Ashwani, let me get your thoughts. Any trades on either side, either some of these pharma stocks that are getting sold down or the OMCs?
See, pharma, different stocks are moving differently. Aurobindo Pharma is still looking strong. Dr. Reddy's, again, one of the stronger stocks. But DV's, I think, is dithering. HPCL, BPCL, I think on rallies, you should now go short because the best of these stocks are probably behind it. But the clear favorite for shorting, I think, remains ADAG, Reliance Infra, Reliance Capital. Chances are this news will take these stocks further on the downside.
Okay, big rally underway. Not sure if there's a price movement in oil prices. Not really. I mean, oil remains fairly subdued. Not an international move that kind of has triggered some kind of momentum on OMCs. It's just a trading bounce that's playing out. Deepak Shenoy, founder of Capital Mind, also with us this afternoon. Deepak, let me take this question to you. OMCs, what would you do now?
I'm still a biased way. I think we're in a process where much of the realignment is happening with respect to they're realizing better gains in general after the deregulations come in place. They're still at 12 PEs. They have a fairly large franchise. If you even discounted the fact that electric vehicles were coming in, it may reduce the use of petrol or diesel in general. I think they have an extremely large franchise that they can utilize even for an electric vehicle push in recharging facilities, in battery operations as well. So I think overall these are good stocks to hold short term as well. I think we're looking at some short-term momentum here and in the long term as well, because the valuations are not extreme as in other sectors. Okay,
fair enough. Ashwani, your thoughts on today's listing? SBI Life, with that premium, it was a 5% premium, I think. Amrish, just to get your views on this one, around these levels, is it still worth holding if you've got subscription?
I mean, if you've gotten the IPO, then yes, I think one should hold on because, just technically, anything which opens above the IPO price and holds on generally tends to hold beyond that. I mean, we have seen that as far as ICICI Lombard was concerned, it opened lower and then closed better than the IPO price, and last couple of days has been holding on. So I think from that point of view, one can hold on, but fundamentally speaking, they are expensive. So I would really suggest a fresh buy at this point of time.
Okay. Deepak, overall, what is your sense on specifically the mid-cap market right now? We seem to be trapped in a clear range as far as the indices are concerned. And there's a little bit of a churn that's underway. I mean, some jewelry stocks are getting excited. NBFCs, I think people are getting slightly more granular and cautious. Any one or two ideas that you've picked up in this market consolidation in mid-caps?
Yeah, we are actually still looking at Manappuram. In terms of the NBFCs, at least that's the largest. That's a stock that seems to have the most reasonable valuation with lower potential loss if there is a default, because they have gold backing a substantial percentage of their loans. There are some smaller other triggers, such as they've taken larger provisions on microfinance, and there is a move into a home loan and auto loan business as well. But again, we're avoiding some of the, some of the larger other home finance companies other than really short-term momentum picks. Some of the other things that we're looking at is companies in the space that will perhaps benefit in the longer term from the electric vehicle push. Some of the stocks we picked up recently were Himadri Specialty Chemicals, Graphite India, which seems to be locked on upper circuit, so it's a little dangerous to say we're recommending it, but we've been on a long-term buy for it, and JBM Auto as well. So again, the electric vehicle push is pushing these stocks further, but a note of caution, everything's overvalued, so be prepared to take a little bit of loss or a surprise at least, even if you're getting into any of these stocks.
Okay, fair enough. So we've got just about 60 seconds to go before trade closes out. Let's quickly wind down to what's been a rather, eventless day, if I could actually call it that. We had a great gap in the morning, but then there was no build-up, no follow-through really coming in. Anyhow, let's take a look at the final rates and how things stack up. So on the upside, it's some of the gas stocks leading the charge. GAIL, with that 4% up move, continues to power through. Obviously, there's a bit of a rub-off maybe off that on a Reliance Industries as well. That was the one heavyweight that was constantly supporting, 2% up on a Reliance. Then Tata Motors was the shining star in the auto pack on the strong auto sales data that we got, but it is closing off the highs of the morning for sure. Bajaj Finance managed a 2% up move. Bajaj Auto about 1.5% on the upside as well. We saw some buying on a couple of metal names like Vedanta, Tata Steel. These were stocks that stood out. In fact, since we're talking metals, let's pull up from beyond the index, Hindustan Zinc as well and Nalco. Some of these commodity plays were very, very strong today because of the way international prices are moving, 6% up on Hindustan Zinc. Okay, getting back to the index and where the volatility started coming to, moving 6% up on Hindustan Zinc. Okay, getting back to the index and where the volatility started coming through. So Maruti, very lackluster. Despite those decent sales numbers, there was no euphoria surrounding that, so 1.5% on the lower side. Dr. Reddy's got fairly wobbly after that Renvela generic launch. Morning was much better. It got sold into towards the end. Cipla is ending with a 1.5% down move as well. The Nifty Bank, volatile throughout the session. Net result is stocks like SBI slightly on the lower side, Axis on the lower side. But some of the private sector names like ICICI Bank, they at least managed a little bit of green. Let's get the HDFC twins up for you as well. HDFC is knocking on with a gain of about 1%, and HDFC Bank closer to the flat line. On the broader side of the market, again, very specific place. Consumer largely was a good place to be in today. A lot of consumer stocks. So whether you're talking about Titan, whether you're talking about retailers like Future Consumer, Godrej Consumer, stocks like Dabur, there's a fair amount of sort of a swing that we saw here between 2% to 3.5%, depending on which stock you're picking up from that pack. Names like Voltas and Havells also, if you want to extend the consumer argument, then some of these stocks had a good session today. On NBFCs, mixed trends. Reliance Capital got sold down quite a bit, along with what we've seen on Reliance Communication today. Reliance Capital has lost about 4%. Communications, of course, is down about 10%. Last I saw, around 11% lower. But if you look at the other side of the spectrum, good gains on something like an Edelweiss, LIC Housing, Indiabulls Housing, even something like a JM Financial. So these were some of the stocks that were holding out. I'll round off very quickly with any other big noticeable losers. HCC, 5% on the lower side. Amtech Auto, about 4% on the lower side. Some of the Adani Group stocks, Adani Enterprises, notably so, about 4% on the downside as well. And finally, last but not the least, let's talk about life insurance plays. Now we have two of them on the street. So SBI Life is going to go home in positive territory. That's how it looks like, about a 2% up move there. And of course, ICICI Pru Life had a good run today on the back of its bigger peer getting listed, but a 5-6% up move towards the close. So that is the action. A final closing at 98.59, waiting for the adjusted figures to come in. Ashwani, where does this leave us? And, with this, I want to ask you about this question on auto and what that tells you about the broader market. I mean, if the market is feeling good, it should have bid up today a Maruti, right? And Aisha should have gone from strength to strength because the numbers are, are good with these big stocks. That didn't happen today. So your thought on auto, I mean, these two marquee stocks and overall the market?
See, it's a bit early to take the message that you are trying to take because, auto stocks have started expecting good numbers every month. So they tend to run up, 3 or 4 days prior to the numbers. But definitely, today you should have crossed 9900, 9920. Now, why we will not fall is probably because global markets will continue to move up possibly. And, why we won't go up is because we have our own problems. So we...
Okay, Ashwani, I'm really sorry. I think we've just lost that line with you. We'll try and reconnect and get Ashwani's final call on tomorrow's trade. But Mitesh, looking at today's performance, how would you approach tomorrow? And tomorrow is also policy day, so maybe we'll have at least some intraday volatility. You don't know which way it goes.
Exactly. I think, I was just about to come to that. I think the bank nifty could be very decisive. And see, we've seen 2 or 3 attempts in the last few days, but failing to get past 24,230 to 25 zones. So I think that could be the key. In case that is not being crossed and nothing comes up positive, then I think the bank nifty could start giving up away on the downside, and that could put pressure on the nifty. For the time being, it still looks like a 97, 90, 900 kind of a market, but I think I do expect that, with the bank nifty possibly not participating, we could see a retest of 9700 and possibly a break below that. Only if the bank nifty starts getting past 24,250, then I think we'll possibly pencil in for 9950 kind of levels being tested on the upside. So in that sense, I think tomorrow's event could be important, while not from a long-term policy point of view, but in short-term trading, I think it could give an immediate directional bias.
Okay, Ashwani, now let me get back to you. We have your line up again. So you're making that point about in the market not really even trying to get to 9,900 today.
See, if a market has topped out, it will make a lower high. And I just suspect that may be the case, because the problem is, if RBI cut rates, market may take the message that economy is so weak that they've cut rates. If they don't cut rates, then maybe, market may take the message that, they are possibly expecting inflation. So damned if you do, damned if you don't. It's that sort of market which possibly wants to move lower, because otherwise today was a great day to take the 9,900 level out, and failing today, given great auto numbers, etc., that just shows that maybe we have a bit of top in place, which does not mean that we'll collapse from here. But while other markets go up, we could still be kind of opening gap up and then losing all our gains, etc., underperforming.
Okay, well, I guess, Ashwani, you're reminding me of the Fed dilemma that we used to discuss a couple of years ago, right? If they cut, that means the economy is weak. But if they don't cut, then, which is good news, which is bad news. Anyway, I guess the market is going to hope for the so-called Goldilocks scenario. Gentlemen, thank you so much for being with us through the close of this Tuesday trading session. Thanks very much. We will see you again with the markets shortly. Well, our closing bell money control question of the day was, will the RBI opt for a rate cut tomorrow? 39% of the respondents say yes, 61% feel no. Our first respondent says there is no reason for the RBI to cut rates. On the contrary, if the rupee weakens further, there is a case for a rate hike. That won't be liked by the market, perhaps. Arun says yes. Though the macros are negative, RBI will go in for a rate cut, thereby bringing some money back into the economy. Praveen says, taking the current status of growth, inflation and the rupee into consideration, the RBI probably will decide against a rate cut. So, diverse views on this trade. SBI Life Insurance had a pretty decent debut on the exchanges today. The stock listed at a premium of 5% to the issue price, which was set at 700 rupees a piece. We caught up with Arijit Basu, MD and CEO of the company, to talk about overall business growth, the bank assurance business, as well as key areas that SBI Life will focus on going ahead. Take a look.
The OPEX ratio of SBI Life is something which has been steadily improving for us. And that is based on two things, the distribution efficiency that we have in both our channels. We have the agency channel where our agent productivity is significantly higher than that of our peers. And in the bank assurance also, the number of people that SBI Life puts in to service the SBI branches is significantly lower. So as a combination of both the things and the fact that we are having a very high revenue growth in the last few years, this is leading to the cost ratios coming down. The agency channel is growing at a rate of 20%, which is double that of the industry growth rate for the agency channel. So our agency channel is growing at double the industry growth rate. Our bank assurance is also growing at double the industry growth rate. Bank assurance is growing at 40%, whereas bank assurance in industry is growing at around 20%. So it is both the channels which are growing much higher than industry, and which is giving us the good results that we are seeing at the moment.
Okay, that's SBI Life. Now, as CNBC TV18 celebrates Danotsav, we get you some of the top corporates and their social responsibility initiatives. In the special, we showcase a waste management project that the Godrej Group is sort of undertaking. We also speak to Nadir Godrej, who, along with being the chairman of Godrej Agrovet, also chairs the CSR committee of the Godrej Group. CNBC TV18's Priya Sheth has more in this report.
I'm standing at the Mahatma Knight Degree College of Arts and Commerce in Chembur in Mumbai. This is one of the 25 colleges where the Godrej Group is implementing an urban community waste management project in partnership with the NGO Stri Mukti Sangatana.
This solid waste management project is in line with Godrej Group's Good and Green vision. The company is working with municipalities in smaller cities to integrate waste management processes employed at its 70-odd manufacturing plants. The idea is to eventually send zero waste to landfill.
We come as resource partners, either technology or financial or human resource where required.
This is not the Godrej Group's only CSR initiatives. It is aligning its various programs with government's initiatives to create greater impact.
As of now, we are partnering, we are looking at the government programs where we have the Prime Minister Kushal Vikas Yojana for skilling, we have the Swachh Bharat campaign, we have the rural electrification campaign, and we have the watershed program.
For FY18, the Godrej Industries Group is working with a budget of 28 crore rupees towards various CSR initiatives.
Strategies to minimize carbon. We want to be carbon neutral, water neutral and solid waste neutral by 2020. We really have a philosophy that waste should be converted into wealth. I do not have any very solid numbers, but on energy we have actually found that green energy is a lot cheaper than whatever we can buy in the market, and we are saving crores of rupees in each of our businesses by using green energy.
Skill development is another big focus area, and the group says that beyond its goal for 2020, the group will increase this focus on training and skill development to achieve other social sustainability aspirations. In Mumbai with Priya Sheth, Kritika Saxena.
All right, so that is corporate social responsibility and how some of the captains of India Inc. are dealing with it. On that note, a quick break. On the other side, Manisha Gupta joins in with today's currency and commodity market action.
Chat commodities now, where we have seen the gold prices continue to decline. It actually is trading at a 7-week lows right now, and we also have seen the silver prices continue to follow suit. Well, there are so many factors really. To start with, it is the strength in US dollar, the kind of run-up that we have seen in the US equities. Add to it that the bond yields rise as well, and that isn't a good recipe for gold and silver prices, where you have seen a decline come in. In the Indian markets, though, we understand that there has been some buying that has picked up, the physical buying that is, and that is something that the international markets would be watching out for, especially with us in the thick of festive season right now. So flat on your screens is how it's trading in the global markets. The Indian markets as well have been on the weaker side here. A few concerns, of course, in the Indian markets, and that really has to do with the GST and now the gems and jewelry as a sector coming under PMLA since the month of August, and that is one deterrent that has led to the numbers being not so high as compared to the previous year. Not that the previous year was any benchmark to go with, but let's get in further details on how the ground report is looking like, and for that we are now joined by Mr. Surendra Mehta, who's National Secretary at IBJA. Mr. Mehta, hi, good to have you. What is your sense, first of all, coming in on the buying in the physical market? How much are the numbers looking like, and how would you compare it to the previous year?
One good thing happening in the Indian market is that in the last about 7 days, the buying has picked up. And hopefully it looks that the customers are now entering the shop looking towards the fall in the gold prices in the country. The fall has been almost in the international market by about 7%, but due to the strong dollar movement, the Indian gold prices have gone down by almost 3.5%. So it's a win-win situation for the customers, and customers are now have started entering the market. But yes, as you said, the money laundering is one of the factors which is keeping few of the customers away from the buying gold.
What is your sense, as we have been discussing, that a lot of, Bullion Association, you guys, industry has been talking to the ministries on perhaps doing away with PMLA, because 50,000 rupees of a transaction when it comes to something as precious as bullion or jewelry is way too low.
Yeah, absolutely. See, in the other developing countries, the PMLA limit, the KYC limit for money laundering is about $10,000 to $15,000. But we are not asking for 6 lakhs to 10 lakhs rupees limit in the Indian market. What we what we are requesting government that please make this KYC compulsory in line with the PAN card requirement. So 50,000 is a very low limit. Hardly 15 to 17 grams of gold can be sold in 50,000 rupees. So what we are saying that PAN card limit currently is for 2 lakhs rupees. Why not bring this KYC limit in line with the PAN card limit? And I think we are very hopeful that the government will consider our request.
So what is the sense right now? Because there have been various reports from the market on how people are not buying beyond 50,000, or they are bringing old gold in comparison, or they are buying just about the gold buying bills from last time to get the conversion. How do you see all of those that taking place actually?
Well, yes, this is one of the very unusual factor we have seen in the last 15 days in the Indian market. Lot of bartering happening. People are bringing raw gold. They are melting old jewelry, bringing raw gold and converting to the new jewelry. But for the jewelers and for the bullion market, it's not a good sign. But yes, for the government, it brings a lot of recycled gold. About 25,000 tons of gold, household gold is already available in the country. So I think in a way, for the government, yes, the customers are now bartering the gold, but as far as the jewelers and bullion market is concerned, it is not a factor to be really considered as great for them.
It's
not.
Because
if this kind of recycling continue, then they will have tough time.
So just one final quick question. What is your sense as compared to the last year? Where can we expect the numbers to be for this festive sale?
Well, I am very hopeful that Diwali season would be better because price is now only one factor which is favoring the customer. And if at all we are at the same level of the last year sale, I think the market will take it positive, and probably with some relaxation. See, basically it's the consumer customers not aware about parting the KYC document with the jewelers. If the government makes slight publicity to that effect, probably things would become more better. Basically, customer is shying away. He is moving away from not providing KYC details. That's a big problem for us.
It sure is, Mr. Mehta. Thank you so much for coming by and giving us those numbers. That's the cue, of course, coming in from the jewelry shops, the industry as well, on how the gold buying is picking up, but not so much because of the PMLA concerns there. But Tapan Patel of LKP Securities as well joins us to talk about that. Tapan, hi, good to have you. What is your sense on the gold prices right now? Because that is the only favorable factor that the markets are looking at. Weaker gold prices is good for buying.
Yeah, hi Manisha, good afternoon. Yes, we have seen a good selling in bullion prices. Today's gap down opening is also was supported by the stronger dollar and positive equity indices. The only factor is the pressure in the prices is the expectation of Fed rate hike in December and positive US data. So these factors are pressuring the bullion prices, and we can expect 1250, 1240 level as the support range in the COMEX level. At MCX, we can expect 29,200, 29,000 levels in a December contract. I think the depreciation in rupees also will limit the downside in M6 level, but the buyers will remain on the very side.
Tapan, also, what is your sense now for the metal space? Because even as Chinese markets are out of action, we have seen a huge run up in last couple of sessions, especially for metals like zinc and lead.
Yes, only zinc and lead prices are trading higher, almost 4 to 5% rises we have seen so far. But I think the rally will continue as zinc has breached the resistance level of 210 levels, so we can expect 220 levels in near term. So buying in zinc is still advisable for the shorter to medium term level, for lead also we can expect 170 levels in the near term. So buying in zinc is still advisable for the target of 220 levels.
Tapan, also comment on the crude oil prices before we let you go, and this has seen a gradual decline. I mean, all the gains that we saw in the prices really have been knocked off right now. We are back at 55 for Brent prices. Do you think this is a correction that the markets were waiting for to pick up buying yet again, or are you still shorting?
Yes, after breaching $50 levels, we were expecting 56, 57 levels at WTI. So prices are correcting from the resistance levels, and we can expect a more correction towards 53, $52 levels. Currently, the market is expecting oversupply from the product inventories. So these will pressure the prices in the near term, and we can expect 3280 levels at MCX in the near term.
All right, Tapan, we'll let you go at that. That's the view coming in from LKP Securities. It's pretty much a buy only in the metal space. Almost everything is a sell call coming in from them for the day today. But with that, it's a wrap up on this edition of Closing Bell. Thank you for watching.